Hello everyone, my name is Benjamin Tan and today with my group mates Gan Jie, Tan Shu Ling and Thong Yu Jian, we will be discussing the size of the Australian financial sector. So without further ado, let's begin. So a brief summary on the things we're going to be covering today will be the range of the Australian banking industry and its participants, the relative market share of those participants, the size of the Australian banking industry, the range of the products offered, as well as the profitability of the sector. Without further ado, let's begin. So the range of Australian banking industry participants include business entities such as authorized deposit-taking institutions, abbreviated to ADIs, life offices and superannuation, other managed funds, general insurance, registered financial corporations, the Reserve Bank of Australia, as well as securitization vehicles. In regards to the relative market share of those participants, around 147 authorized deposit-taking institutions collectively hold around 55% of the assets of the Australian financial institutions, with a majority of the remaining 45% being taken up by life offices and superannuation. With that out of the way, I would pass the presentation on to my teammate, Eugen.
And so now I'm gonna talk about the size of the Australian banking industry. So ADI comprise 7 of the 100 listed companies. They make up to the S&P and ASX 100. So for the 7 major banks will be NAX Banking Group Limited, Bank of Queensland Limited, Bendigo and Adelaide Bank Limited, Commonwealth Bank in Australia, Macquarie Group Limited, National Australia Bank Limited, and also Westpac Banking Corporations. And ADI contain a huge size in the market, as in S&P ASX 20, they consist of around approximately 44%, and they consist approximately 27% in total market capitalizations of the S&P ASX 100. And next, I'm going to talk about the key products markets for authorized deposit-taking institutions. As ADI, they offer a lot of product and also services. And now I'm going to talk about what kind of product and services they have. So first, they're going to be transactions, accounts, term deposits, home loans such as residential and also investment, and other loans such as personal loans, credit cards, institutional banking, SME banking, and also agricultural finance. And next slide, I'm going to talk about the profitability of the sector. As you can see from the profit, they make it 25.9 billion in the 12 months to September 2017, and just in the September quarter 2017, they also have made 9.2 billion, and in short, they have made a lot of profit during the quarter of September. And as you can see that the major bank has made 64.5% of the profit margins June quarter 2017. And also the domestic bank had made 24.7% profit margins during the June quarter 2017. And thank you. Next, I will pass to my friends.
According to the author of the article, the largest part of Australia's financial system is the banking sector. It comprises 147 ADI, which collectively hold around 55% of the assets of Australian financial institutions. ADI held $4.6 trillion of assets, which is around 2.5 times the size of Australia's $1.8 trillion nominal economy as measured by nominal GDP. The bank-based system is the leading role in mobilizing savings, allocating capital, overseeing the investment decisions of corporate managers, and providing risk management vehicles. Next, I'll be presenting about the advantages and disadvantages of bank-based financial system. The first advantage of bank-based financial system is improves capital allocation and corporate governance. Banks remove the disturbance resulting from unbalanced information through establishment of a long-term relation between themselves and firms. As a result, bank-based arrangements could improve the optimal allocation and company governance more than the securities-based system. The other advantage of bank-based financial system is promote growth in developing countries. Financial intermediaries promote growth by pooling risks, providing liquidity, and monitoring risky innovations. The disadvantages of bank-based financial system is retard innovation and growth in underdeveloped countries. If bank loans are somehow unique and not readily replaceable by alternative credit sources, then credit rationing by banks will depress capital investment and retard economic growth. The next disadvantage of bank-based financial system is causes systemic imbalance. A large banking sector causes systemic imbalance, such as overinvestment in housing and increased systemic risk.
In environments with low nominal rates of interest, monopoly banks have little market power. However, as nominal rates of interest rise, demand for insurance rises and monopoly banks will enjoy a greater degree of monopoly power. Monopoly banks earn profits from investment in high-yielding capital, but not from holding cash reserves. Hence, a monopolized banking system holds a lower fraction of its assets in cash reserve than a competitive banking system, and a larger fraction of its assets in the form of capital investment. By itself, this would tend to lead to higher real rates of growth in a monopolistic than in a competitive banking system. In conclusion, ADI is the largest banking sector in Australia. The major banks hold approximately 3/4 of total assets held by ADIs in Australia. Banks provide a wide range of products and services to Australian consumers and businesses. Bank lending is a key source of external financing for SMEs and agricultural businesses in Australia. These are our reference lists. Thank you.